amid global uncertainty and geopolitical risks, how do you see the case building for gold from here?
It's a very interesting time, actually, to be discussing about gold. As you mentioned, we just released our gold demand trends report recently. And one of the things that we've noticed is that actually investment demand overall has increased. And this is on the back of different dynamics, including the fact that investors now are expecting the Fed, the ECB has already cut rates, but there's expectations of the Fed to cut rates going forward. That decreases the opportunity cost of investing in gold. In addition to that, geopolitical risk remains fairly high, and that has supported, gold from an investment perspective. From a consumption perspective, though, we did see a deceleration, not surprisingly given the elevated gold prices, as well as some constraints on disposable income. But that has been, or we expect that to be somewhat mitigated by the recent announcement of the Indian government to cut tax on gold imports and other related gold taxes.
Which would be a shot in the arm, right? Given that India loves gold.
And it is also a very timely tax cut, because the the important season for gold buying starts actually in August. So, it's exactly at the time where 60% of annual demand usually happens. So I think that there's quite a strong, feeling amongst retailers and manufacturers of strong demand coming up.
How much can demand from just India and China, that are big gold consumers, can push up the price further from here? Because we're talking about 2,400. But, we've had very aggressive targets on gold, blue sky targets of 4,000 and beyond as well. What's your own sense of the upside that's coming purely from these two big markets?
Well, India and China are indeed the two largest markets for gold, and it is really important to understand that even though sometimes people think that consumers are more price takers than price makers, in the long term, their demand does matter. Roughly speaking, our models suggest that an additional 30 tons demand for gold translates into a 1% increase in the price. That's based on historical perspective, right? So what this means is that depending on kind of like where we land on consumer demand, how much that increases, that will eventually translate to indeed price performance. It is also important to understand that gold has a dual nature, right? And sometimes people miss this. It's both an investment as well as a consumer good and adornment and so on.